Now we are starting to speak about the directors in part number 2. So before I start with part number 2, I want to make sure that everybody is comfortable with part number 1. If you want, please go through part number 1 again at your own pace. Please go through part number 1 at your own speed so that you are comfortable with everything in part number 1. Please make sure that you have also made a list of topics from E1, P1 and F1 which are very important to go through, because when I went through the pre-scene with you, I highlighted the E1, P1 and F1 important topics. It is very important that you have a list of those topics ready from part number 1. Please also make sure that you are comfortable with all the information in the industry analysis, pre-scene part 1, then start with pre-scene part 2. I don't want a hurried approach. I don't want a fast, quick approach where you are, just going through the videos for the sake of it. Go through it 1 or 2 times very, very carefully, very, very slowly, and you will absorb a lot of important information. So with that, let's start with part number 2, the directors and key managers. Now it is very important for everybody to always know the people who are running an organization. Because it's a small family-based operation, a medium-sized company, family-based operation, it's very important to know the family. It's very important to know the people who are running the business, because their ideas will be the ideas of the business. So we have John at the top, who is the managing director. Under John, we have Rina Gomez, who is the deputy managing director. When John is not available, Rina makes the decisions. Under Rina, there are different departments having different managers. So under Rina, we have Jack, who is looking at production, Ella looking at sales, Lois looking at finance and HR. All 3 report to Rina. It's a very triangular structure, and then Rina reports to Jack. Or pretty much if you see the lines, it's all 3 reporting to John and Rina. That's a triangle which has been formed. So it's pretty much one person at the top making all the organizational decisions. So we can see that the business is dependent on the family members. This is when major decisions are made by 1 or 2 key personnel. Over here, John and Rina making major decisions. So in the future, we could be asked to move on to a divisional structure, product-based divisional structure, or a matrix structure, as well as there is an organizational overhaul which is being planned. And this is there in your E1 syllabus. It's very prevalent in your E1 syllabus. It's not a new topic, that has come up. So after keeping that image in mind, let's open up what each director is good at. So first we have John Kanann, who is the managing director. John has overall responsibility for the business and is actively involved in all areas because he's at the top. So he insists on having the final sign-off on new designs and new products because he is that expert. John started with the business at the age of 16 and is now 52 years old. Majority of his life he spent in the business. So naturally, he's going to have a lot of knowledge of this business. He's trained as a saddler and is a member of the Keelan Guild of Saddlers. He's part of the guild. He knows what other businesses are doing. He knows the innovation taking place, and he's frustrated that his business is not moving in the same direction. That is why he's acknowledging that the business needs new ideas. We learned that in part number 1. So he's a trained saddler and a member of the guild. So he will know what saddles are all about, and his thoughts or knowledge can give shape to the products of the company. He has worked in the business for 36 years, so he knows manufacturing of saddles in and out. Anything related to production, saddle making is within his skill set, and his knowledge will be of great use for a company like ours. You can use his name for consultation while writing any manufacturing or technical oriented topics or growth related topics as well. Now see, like I said, knowing the managers is very important because they run the business. But second, underlying truth is that if you know the names of these managers, you can use them and gain business skill credit, gain business skill marks, which will really add value to your answer. How? For example, you're writing anything about innovation, marketing, new saddles, whatever. You can start your answer, or anywhere in your answer you can write, let's take the opinion of John, because he has worked in this market for 36 years and he knows saddles production in and out. For example, if you write something like that, it tells the examiner that this person knows the company. It will give you free business skill and integration marks, because at the end of the day, that's what you do in a real working environment as well. You'll say, right? If your manager is good at something, while writing a response, you will tell that, okay, let's speak to this manager as well, because he or she might be able to give us some good input. That's the same process I want you to follow in mock writing and in the final exam as well. Make it as natural as a working environment as possible. So first, knowing the managers is important. Second, you can remember the skill sets of each manager. For example, John for design, products, for his experience. You can remember that and then use it when the time comes in our mock question writing. So John is the managing director. Then we have Reena, who is the deputy. So Reena joined the company from university in 1993 as a member of sales. Before becoming deputy, she was sales manager. So from sales, she was promoted to deputy. As part of her duties, she oversees sales, finance, HR, and deputizes for John when he is away. So Reena is pretty much making major decisions for sales, for finance, for HR. For a small organization, okay, I understand that. But as we grow, something new comes up, some new innovation, we might need to look at delegating these responsibilities. So you can use her name for consultation on sales because she has been the sales manager. And she has worked in the business for 31 years. So she knows the business. Third, we have Jack Newman. So Jack started as an apprentice with Kanann in 1985. He has worked in each of the company's production departments before becoming production manager. And he's responsible for all aspects of production and raw material procurement. So he does the procurement, he looks after production as well. So input as well as output is controlled by Jack. Again, very well experienced, we can say that. He's worked his way up in all production departments. So he has that cyclopedic knowledge. And he can be consulted on for cost cutting assignments because he knows every single process. So where to cut, what is good, what is not good, you can ask Jack. We can expect a scenario where our company is committing to TQM in the long term. And hence knowledge about JIT, TQM, quality costs and its relation to Jack being the production manager from your E1 syllabus is very, very, very important. Fourth, we have Ella Beard, sales manager. She looks at sales as well as marketing. She reports to Reena. She joined Kanann in 2022. Immediately prior to her appointment at Kanann, Ella held a senior sales position for a competitive saddle manufacturer in Keeland. So she has that knowledge. She's already worked with a competitor. So she's been in the industry and she knows what the competitor is doing. So, she knows the strategies we can implement to improve our sales because at the end of the day, she's the sales manager, right? Then we have Lois. Now, Lois looks at finance and HR. Finance is going to change, HR is going to change, IT is going to change for this business because it's very clearly prevalent in the pre-scene. So she qualified as an accountant in 1988 and has worked with Kanann since 1995. So HR is an important function for any organization. HR management is going to be very important for our business. This is E1. She is involved in arguably the most upcoming and growth heavy functions of our company, which is finance, which is HR, which is IT, specifically IT. So something the business needs to look at is embracing change and moving in line with the global trends, because we don't have that prominent website presence or online presence, social media presence, something that we need to look at. So IT manager, a dedicated IT manager can be something in terms of innovation which the business can look at. So these were the 5 simple structural managers of our business. After that, they've given us production, sales, and finance teams. Now in the production team, there is Jack at the top, then there is production supervisor, finishing team, distribution team, and there is also raw material and warehouse team. So everything related to production is controlled by Jack. So very natural, this is an evidence of a functional structure. Same way, if you look at sales, Ella is at the top and sales team under her. So everything related to sales, Ella is looking at. Again, evidence of a functional structure. Even for finance, there is Lois at the top, then there is an HR assistant and finance officer. Both relate and report to Lois. So it's a very clear indication that currently we have a functional group structure, where similar departments or similar departments are each function. For example, finance and HR, one function, production, one function, sales, one function. This is recommended for small sized organizations who work in a stable environment and who do not offer many kinds of products. So currently functional structure is very correct for my business because we are small, but environment is changing. We are looking for more innovative products. So moving forward, there could be a scenario where you move onto a divisional structure or a matrix structure, which is from your E1 syllabus, and it's very important for you to revise and know and acknowledge this aspect. So let's make a quick overview or a summary. So we have John, who looks at all aspects of the business. Second in command is Reena, who takes care of all aspects as John's deputy. Lois deals with finance, HR and IT. Her role could expand as significantly as IT is growing. Jack deals with production and is well experienced. Reena deals with sales and marketing. Now all of these are executive directors. We are not a listed company, we are a very small company, I understand that. No information has been given about any non-executive directors. But still, from a good corporate governance guideline, from a good corporate governance perspective, a small company can have at least 1 or 2 non-executive directors that have the experience of the outside business and can help our business grow. It would help the business and it would also fulfill good corporate governance practices. Because right now John himself is worried about the structure of the business, how the business is laid out. John is actually worried about that. So keeping all of that in mind, remember, it's not a legal requirement because we are a small company, we are not a listed company. But still, corporate governance guidelines are said to be of best practice. And I'm mentioning this because corporate governance is part of your E1 syllabus. So it's important that I just bring this forward for you, E1, F1 syllabus. That's why it's important to get it up. But still, remember the overview, remember the directors like I mentioned. Next, there is an article. So this is the 5-minute interview with Freya Kanann. This is an article which is part of the pre-scene, but it's very important. So the article is Equestrian Pursuits, the 5-minute interview with John Ford, a senior editor. Now John says, lovely to meet you finally, Freya. I've followed your equestrian career with great interest over the past few years. And hear that despite being busy competing, you have also graduated from university. We already know Freya has this background. She is competing as well as is educated. A great achievement. Many congratulations. What are you going to fill your time away from riding with now? So when you're not riding, what will you be doing? John is asking. So Freya says it was a bit of a juggle at times, especially with international competitions in different countries. But I'm competitive and determined, so I just put my head down and worked hard. In terms of next steps, I've just spent some time shadowing my father at Kanann to start learning and seeing how the business operates. So again, family business. Freya does not have much of time, but she is still shadowing her father, learning the business as much as possible. John, so the idea is to move into the family business full time? Freya says yes. Although thankfully dad knows that my equestrian career takes precedence at the moment. So currently she is not 100% invested, but she is going to be, that's what she is saying. So the Kanann name is well known for general purpose saddles. On the first page itself we learned we don't do specific saddles or horse riding equipment accessories. We do general purpose saddles only. So John is asking, do you have any Kanann saddles that you use? This is what he's asking Freya. So Freya says, actually I do use a Kanann saddle when I'm riding for leisure, but I have different saddles for competing. And these come from the brand that is best suited to that specific event. So she's the owner of a saddle manufacturing company, but she's buying her saddles from somewhere else. So why? Is it a capacity issue or an expertise issue or a production issue? Why are we not making these saddles? Do we not have capacity? Do we not have production expertise? Do we not have the knowledge? So is it because other markets are considered unfavorable because of high competition right now? What is the situation? John says, will you now become the face of Kanann? Freya says, actually, I guess I will. In fact, I recently received an offer of sponsorship from the manufacturer of one of the brands of saddles I use when competing. Although it was lucrative, I declined it because Kanann is a family business. I don't want to be seen as an ambassador for another brand of saddles. So then John says, so does that mean Kanann might move into the field of specialist saddles for competing? So the question is coming up, will Kanann expand? So Freya says, in time, possibly. Many of the people I know at the higher levels of sport have heard of Kanann, but they are not using it for specific purposes because it's not made for specific purposes. In time, I'd like to push Kanann forward to become the number one choice for general purpose and discipline specific saddles. So even if you want a general purpose saddle, people will go for Kanann. Even if you want discipline specific saddles, for example, saddles for show jumping or dressage, people will go for Kanann. That's the vision that Freya has. So remember the vision of your company. The vision of your company is to create a saddle which everybody can use, which anybody in the sport of horse riding, may it be for leisure or for competing, the first thing that comes to mind is Kanann. That's the vision. So now very important to note that there is clear indication that we could need to invest in new machinery if you want to make new products. So your F1 topics related to machinery recognition, they might tell you that we've purchased a new machinery. How will we recognize it? The revaluation and impairment of existing machinery can also be asked. The disposal, they might tell you we are now disposing of this machine and it becomes a non-current asset held for sale. How do you record it? So there are F1 topics. All of these are F1 concepts which are very, very prevalent and very important. So you should revise them. So last, John says, plenty to keep you busy with over the next few years. Good luck with all of that. I shall be following you. So the next few years, the vision is to become a famous brand in terms of saddles. So I'm again thinking of new scenarios now. Addition of new premises and property, plant and equipment for expansion, IS 16. Fast growth can lead to capacity management issues, capacity planning, P1. It can also lead to costing related issues because of our current costing system, P1. It can lead to different variances as bulk purchases and sorting of material, storing of material will be undertaken by the business. So material variances, P1 syllabus. It could lead to working capital issues since cash will be tied up in new plant, new machinery. So the working capital cycle will be important to understand. And very common question is, now we don't have funds, so instead of buying we are looking at leasing. How will the lease be recorded? So your IFRS 16 becomes again even more important. All of this is in your F1 syllabus area. P1 is the most important, but you can see how concepts from E1, F1 are also being asked. You should add these topics which I'm mentioning in your list of important topics because these are important areas. So that's the 5-minute interview which has given us a great insight into the vision of the company and how the company is going to be taken forward. Next, we have other information about company operations. So now they're giving us specific information about the operations of the company. First, starting with sales markets and sales channels. Now, Kanann sells its saddles in Keeland, other parts of Europe, Asia and America. Very good. From our industry analysis, it is very clear that this sport is greatly coming up in America and in Asia. These are the focus markets or high growth markets. So we are already selling in these markets, which is a good thing, but how can we expand on the same will be a very important consideration. So sales in Keeland accounted for 65% of the total revenue. Now, market segmentation and understanding the different factors of this market will be important. Like I broke down, I did the segmentation for you right now where I told you that America and Asia are the high growth markets. So as we are a modern business using technologically advanced techniques to gather and store data and then use it to different market scenarios. So we are a modern business, right? Because in this modern environment, we have Freya, who is very much of this generation. So as a modern business, we know that majority of our sales are in Keeland. Asia is 5%, America is 8%, Europe is 22%. Okay. But are we using this data for our benefit? Are we storing customer data, seeing how customers are making their decisions, seeing what is making the customer buy our saddle? Are we gathering all of this? No information has been given. So our E1 syllabus of data management, digital costing, big data, data analysis becomes a very important consideration which is pretty much being missed by our business. These are opportunities, E1 syllabus. So for the year ended, the company sold 1,705 saddles, generated a revenue of 5.86 million and a gross profit of 33.8%. Numbers look good, but when we go to the financials, we will see that it's not really good in terms of growth. So further evidence so far that we are a medium-sized company. The company will continue to grow. So management of the company and having good control over costs, decision making will be very important. So as we are still in the growth stage, it is natural that our costs are going to be high. This is from our P1 syllabus. Controlling the costs will be very important for our business. So Kanann's revenue pie chart has been given, where Keeland is majority sales, then there is Europe, then there is America, then there is Asia. So focus is on Keeland, but we are in high growth markets. So Kanann does not sell direct to the public. It sells to equestrian wholesalers and retailers. We learned in the industry analysis that this is the trend. These wholesalers and retailers are independent of Kanann. Some specialize and sell only saddles, whilst others sell saddles as well as other equipment. Some wholesalers and retailers only sell Kanann, but others sell different brands too. So we have specific retailers and we have general purpose retailers as well. Let me just move this up. So you will see that some wholesalers and retailers only sell Kanann. So good relations with your suppliers and your sellers is important to ensure a smooth production process. And the sale process is key for any manufacturing business. So relationship management from your E1 syllabus becomes very, very, very important. Working capital management will be important since paying our suppliers on time, collecting from the dealers on time is again very important. So working capital cycle, receivables management, payables management, F1 syllabus. Now secondly, we don't sell directly, which means we don't sell on our website, we don't have an app, a mobile application, which means there is a chance that we are missing out on to gather customer data. Nowadays, everybody or every business, small or big, wants to sell online. Why? Because you know where your customers are buying from. So you can focus your marketing on those areas. You can focus your stores, you can focus your storing, you can focus your saddle availability in those specific areas where there are major sales. So your even topics of AI, big data, data analysis, data mining is a big opportunity for this business which we are missing out on because we don't have direct customer access. So an innovation could be for my business to also have direct customer access. So selling directly to customers could be a new avenue that the business looks at. So Kanann receives orders from wholesalers and retailers by either their email or by them placing orders with Kanann's sales team by phone or in person. So via email they'll get the orders or by phone, very traditional. The sales team try to visit the wholesalers and retailers based in Keeland at least twice each year. So sales team is only focusing on wholesalers in Keeland by visiting them twice a year. What about the wholesalers and retailers abroad? Are we in constant communication with them? Because that's also a major market, right? The credit period given to wholesalers and retailers ranges from 30 to 60 days. And because of close relationships with the sales team, all wholesalers and retailers pay within the appropriate credit period. So credit management, like I've already told you, will be key here. If this is not managed, our working capital cycle will be very much affected. Your F1 syllabus. Now to production. We spoke about sales, where there is a chance of growth in terms of direct access to the customer through website, app, or big data management. Now there is production. Kanann manufactures all of its saddles as a single production facility. Now, a single production facility means we are reliant on one production unit to run all production or assembly functions. All Astral products, all Meteor products, all Comet products, which are our three major categories, are made in one unit, one production facility only. So first maybe Astral will be made, then Comet type 1, then Meteor type 2, whatever as is the production run, all different types on one unit. So we will start to think about benefits and limitations of having one single centralized unit. We are a small company, I know that. But a small company can have different production setups, different production units in smaller sizes as well as we continue to grow. The facility includes several different buildings which are used for production as well as raw materials and finished goods warehouse. So different buildings for production, for raw material storing, for finished goods storing. So this is very clear evidence that we do not use JIT because just in time says, even though our business has good supplier relations, JIT says that you should not have any inventory as inventory is waste. So JIT TQM is not being used, E1 syllabus. The total production and packing time for one saddle is approximately 28 direct labor hours. So to make one saddle, you need 28 hours of labor time. This is, a very tedious labor intensive process that we currently have. That is why maybe new innovation, new modern equipment is what John was referring to earlier in the pre-scene. But this tells me that labor, it's not available at an unlimited scale. At some stage there will be a limitation. Maybe we have reached that limitation stage, and that is why we are not able to produce more, because so much labor is required for one saddle. So approximately 28 hours of labor means the limiting factor over here seems to be direct labor, since this is a highly labor intensive industry. Now when analyzing limiting factors, and there is more than one limiting factor, for example labor can be limiting factor, then electricity or water supply, this can be limiting factor. So if there is more than one limiting factor, then you generally have to use the LPP, linear programming path or linear programming graph method, where you figure out which product you should make first so that it's more profitable for your business. How much of which product to make first based on the profitability of that product. So to understand the limiting factor or limiting factor versus most profitable products, an LPP graph is often created to understand which products to focus on. So a new factor could be raised in the question. They will say that labor is limiting, but now electricity supply has also become a limiting factor, for example. And then they'll give you a LPP graph. The graph will already be drawn out. They will give you the x-axis, y-axis. They will tell you that these are the two limiting factors. You then have to read and explain the graph. So your LPP concept, an exam favorite topic from your P1 syllabus, is very important. Don't worry, we will be doing a mock question on it as well. But I'm just pointing this out to you that it's a very important concept. So limiting factor analysis, throughput analysis, LPP, very important. Now since we're speaking about the importance of labor over here, understanding and evaluating different labor variances will be very important for the business, because labor is so important. So this brings in to test the possibilities of your variance chapters, your labor variances, idle time variances, efficiency variances, very much something that is asked. After that, they are telling us that there are 4 main stages in producing a saddle. First is cutting, then it's assembly, then it's finishing, and then it's packing. So cutting, assembly, finishing, and packing. These are the 4 main stages that my business follows in terms of production. Now we will deal with each aspect one by one. First, we are dealing with cutting. So cutting is where we already know that a saddle consists of several pieces of leather. All the leather is bought in as butts, and there are 5 grades of leather used across a range of saddles. So different types of leather we will buy in. Each type of leather makes a different range of saddle, because premium leather, premium price, regular leather, regular price. Very important over here in terms of the buying. How are we doing the buying? Are we using the economic order quantity method, the EOQ method? This is there in your P1 syllabus, so very important to revise what is EOQ, how EOQ is used, very important. Secondly, do we buy from single suppliers or various suppliers? A discussion on single sourcing or multi-sourcing is also important here, so start to think. Couple advantages, couple disadvantages of single sourcing versus multi-sourcing, because this is an important consideration. A butt is a sheet of leather. The main leather parts of a saddle are the seat, the knee rolls, the flaps, and the panel. These parts are cut to shape and size for a single saddle from a single leather butt. The pieces are cut and prepared by hand using cutting dies and machines, so labor intensive, hand is being used. The offcuts from the leather butt are not used. Offcuts are thrown away. Now let's think. Firstly, it's labor intensive. Second, the offcuts are not used. So there could be a future scenario where they tell you that these offcuts are now being used to make other equestrian products. For example, it's being used to make the outer layering or outer stitching of stirrups, outer stitching of bridles, for example. That brings in our joint product costing syllabus area, P1 syllabus, because then it becomes a joint product. So you see different avenues and very simple ways your syllabus areas can be tested. Now, this is cutting. Assembly. Assembly starts with the tree. The tree is the inner skeleton of the saddle and forms a base onto which the leather is attached. The company purchases the trees used to form the skeleton of the saddle from third-party suppliers who use 6 to 8 layers of plywood in each tree. So for the purpose of cutting costs and investing in experts in this particular job is something that the business is open to and has done. Other non-core activities can also be outsourced. So the company is already purchasing trees used to form the skeleton of the saddle from third-party suppliers. We're already purchasing this ready. We're not looking at making the tree in-house. So this is something which the company found out that, okay, there are experts available. They're doing it at a very good rate. So can we buy that? Outsourcing of one particular aspect has been done. So advantages, disadvantages of outsourcing from your E1 syllabus. Very important. The company insists that their saddle tree suppliers source wood from sustainable forests. So our sustainability credentials are showcased here. Sustainability nowadays is a differentiator, is a competitive advantage. So remember that your business is supporting sustainability. The trees used to come in 3 different qualities, and the type of trees used depends on the model of the saddle it is included in. More premium tree, regular price saddle, regular tree. The trees supplied are already reinforced with metal strips around their full length so they don't lose their shape. So the first stage of assembly is to add the head plates which form the shape at the front of the saddle and the stirrup bars using rivets and screws. So once the tree comes in, it is, the head plates are added and stirrup bars are added at the side using rivets and screws. Since it is a mix of manual and automatic processes, the variance topic is very, very much prevalent, which is definitely going to come up in one of the 3 variants in the exam. I am definitely going to test you on it in my mock questions, but I'm pointing out the importance. Next stage is webbing, which makes the seat, which is the suspension platform for the rider to sit on. It separates the seat from the tree. So the tree, then there is webbing, then there is the seat. So this is how the saddle is one by one assembled. That's what they're telling you. So we note that there are many steps within the assembly process itself. Because first the tree comes in, then to the tree the handle is added, then the stirrup bars are added, then the webbing is added, then the seat is added. There is so much happening in the assembly process. There is a mix of labor and automated methods as well. And in the future there will be more machines that will be, doing the job of humans. So this points to the benefits of having a modern costing system like ABC. Because each activity can then be well understood and well costed for. Traditional costing adds an average overhead rate to the direct costs of manufacturing products and is best used when the overheads of the company are low. Activity-based costing, on the other hand, will give us accurate costing for each product. It's a very expensive method, time-consuming method, but it will give you the activity costs, the costs of the webbing stage, the cost of adding the stirrup bar stage, for example. You'll have that breakdown of the costs. So you'll be able to understand better and you'll be able to divide the costs better. So moving to activity based costing is a very realistic exam scenario, which I am again going to speak about later in the finance section and in the budget section when we get there. But remember that because of these different processes, different stages, different steps, the traditional costing system might not be very accurate for our business. So next, this process is done by adding the webbing or adding the web to the between the tree and the seat is done by adding the webbing which is stretched lengthways and across the tree to form that particular shape. When the webbing has been stretched, the next step is to simply add the padding and put it in place. So just simple technical knowledge being given to us over here, technical ideas being given to us over here. Next, we have the saddle is then sewn together. Once everything is in place, all the layers are in place, it is sewn together. So saddle is sewn together. Each saddle is stitched together using a mixture of hand sewing and industrial sewing machine. Again, labor as well as machines. After the saddle pieces have been sewn together, the saddle is then stuffed with flocking and any design elements that is to be added. So this shows that there are different manufacturing or assembly lines, and this can reduce inefficiencies but increase your maintenance costs. One after the other, there are different processes. So we will try to understand the bottleneck processes of the company. We have already understood one bottleneck, which is going to be very clearly labor. Any breakdown or delay would cause big repercussions for the business. So maximizing throughput, your throughput concept, already spoke about it when we did the LPP discussion, is very important. Now we have finishing. Last, completed saddles are moved to the finishing department. Here the saddles are oiled. Oiling the saddles prevents the leather from cracking and it maintains the life. The saddle also undergoes final quality checks. Promotional labels and brandings are added. Then comes final stage, packing. Finishing was penultimate, packing is ultimate. The finished saddles are moved to the packing department. Packing is extremely important given the high value of the saddle. The different types and sizes of saddles are packaged in bespoke boxes which are bought in. So again, we are buying in the packing boxes. These boxes are designed for presentation of the saddles by the wholesalers and retailers. So the boxes are very important in terms of marketing. The boxes are also used by customers to transport the saddles from one place to another to protect the saddles. So this is a very important part of the business and needs to be focused on because it's part of marketing. If you essentially look at it that way, your product is going to be looked at with the box when a customer chooses to buy it or not. So this was our entire manufacturing process explained. So we first have distribution now. Distribution of saddles is outsourced to a major distribution company which delivers anywhere in Keeland 6 days a week. Same distributor is also used for sales to other countries. So we only make and then store it. It is then given to our wholesalers and retail partners by a separate distribution company. Then we have purchasing and suppliers. Now the main raw materials that we need are firstly tree. So the company uses 3 grades of general purpose trees in their saddles. Type 1, Type 2 and Type 3. Type 3 is the most expensive because it's the lightest tree. Lighter the tree, the better, right? Because it's the base of the saddle. Second, you have leather. So leather butts come in 5 grades or leather sheets are in 5 grades, A to E. A is the highest grade, so most expensive. E is lowest. A butt is 1.5 square meters and all butts are the same size. From our pre-scene, we know that the offcuts are thrown away, which can be looked to be utilized to generate extra revenue in the future. Then there is flocking. Kanann uses 100% long fiber white wool flock. It is the best quality flock as it is very hard wearing. Flock is very important as it defines the comfort of the seat. Then there is consumable stuff that we use in our day-to-day production. Webbing is purchased in 100-meter rolls and is made from recycled nylon. Again, recycled, so our sustainability credentials. Tools include bone folders, awls, needles, plastic mallets, stuff needed for day-to-day production. Other consumables are dyes, glues, polyester, linen, nylon thread, stirrup bars, rivets, screws, as well as packaging. All of these consumables you will need to buy in, right? Only then you can use it in your production and then in your day-to-day assembly. So we see that there are many different kinds of inputs and hence different kinds of finished products with different prices, with different specifications, because different type of leather, different type of tree, different type of consumables like the outer finishing, like the packaging. There is lots of different customization which is possible. So this shows that our business has many different products with different specifications, and when different products are being sold, activity-based costing is one system that can be often used. So the use of ABC is again prevalent because of this discussion over here. And also because we are purchasing so much. Your purchasing decisions involving risk-related decision making is important. So your concepts of expected value, standard deviation, payoff tables, different payoff tables also is very important, because they can give you a payoff table saying this is the payoff table of buying different quantities from different suppliers. According to our risk attitude, which supplier should we choose? So you should know different risk attitudes. You should know the different decision making criteria. This is there in your P1 syllabus, very, very important. Your decision trees, your risk related decision making, payoff tables is there in your P1 syllabus, very, very important. Next, Kanann has good relationships with its suppliers. Many of the suppliers have been with Kanann for over a decade. In fact, some suppliers have been with the company since its inception. So we have such strong supplier relations. Should we not explore JIT as a modern business, because already everything is in place? We have good managers, we have good supplier relationships, so it can be used, right? It will help us strengthen our working capital position as well, because cash will not be tied up in inventory, in raw materials. So where possible, Kanann chooses suppliers with a commitment to follow sustainable production processes, our competitive advantage. For example, Kanann insists that the packaging bought in for its own saddles is made from 100% recycled packaging. Credit terms for suppliers range between 30 days and 75 days. Some suppliers offer prompt payment discounts, although Kanann does not always take advantage of these. Bulk discounts are also available on the flocking and many of the consumables used in production. Kanann does take advantage of these where possible. So the pros and cons of storing in inventory need to be kept in mind. Also, working capital issues need to be kept in mind. So this was my purchasing. Now warehouse. Receipt and storage of goods inwards, issues to production, and storing of finished saddles are all again labor intensive activities. So great use of labor is seen in my organization. This was our entire production process explained. Now we have the employees section. Now Kanann had the following employees on 30th June 2023. Production facility 40 and head office 15. Head office includes sales, finance, human resource and other directors. So very clearly the bifurcation has been given to you. Now what I am thinking is 40 people in manufacturing, 15 people in all the other important things. So the breakup of head office is not given over here. Very clearly they've said it includes sales, finance, human resource, IT, everything except for production is under head office. So very clearly we know that IT is ever growing. If there's an IT expansion that we are planning, do we have the people? I don't think so. If new marketing techniques we want to focus on, do we have the people? If new HR techniques we want to focus on, hire new people, do we have that extra capacity? I don't think so. If finance we want to change from our current costing system to activity based costing system, will the same number of people do? I don't think so. So overhaul of the business in terms of its personnel as well as in terms of the departments that we have is on the cards, which is very clearly evidenced by this employee breakdown that they have given to us over here. After employees, we have the discussion of finance. Very, very important. Kanann's financial recording systems are not integrated and must be reconciled on a regular basis to ensure each area is accurate. So not integrated. So integrated and not integrated, first let me explain that to you. So integrated accounting is a type of software that combines major financial accounting functions into one application. For example, maintenance of a single set of books. If you click on expenses or if you see expenses, all the expenses will be in one place. You will not have different expense accounts that you will have to keep tallying, which happens in non-integrated systems. So integrated is one system. So business activities such as payroll, HR, business operations, and even meeting deliverables can often incur significant expenses. An integrated accounting system includes the following characteristics: reduces the chances of error, greater accuracy, maintenance of a single set of books for expenses, for income, for orders, for operational and for financial purposes. There is a single set of books. That's integrated. A non-integrated system, this follows two distinct records for financial accounting and cost accounting. Financial accounting separate, management accounting separate. This is also when the system is often called the cost ledger accounting system. So with financial transactions, cost transactions reported separately. This system enables access to data and information in a more detailed manner. So it also has its advantages. You have your separate cost information like your budgets, your separate financial information like your financial statements. Principal ledgers are maintained alongside a control account. However, this can translate into the need to look for financial information in multiple places. Of a single set, of a single thing, you'll have to look for multiple places for that information. Like store ledger, work in progress ledger, the cost account will also maintain wages ledger. But if you want to see the total expenses, you'll have to sit and add all of this, which there is not real time for. If there is one simple software integrated accounting system, everything is in one place. There are advantages and disadvantages of each, which I have discussed. Currently, we have a not integrated system. The company operates a standard absorption costing system based on direct labor hours as a single fixed absorption rate. Think, in today's modern world, are all your variable production overheads directly related to labor? Let's say the business has some automated machines. Is the running of the machine or the cost that the machine generates directly proportional to labor hours? No. It's proportional to the number of units it produced, the time it spent in terms of maintenance, the time it spent in terms of inspection, the time it spent in terms of number of setups, stuff like that. It's not related to direct labor hours because not everything in today's modern world is labor intensive. So currently the absorption costing system is using a single fixed absorption rate. You are starting to see the disadvantages of absorption costing. It's an easy process, quick process, good for, simple, small companies like ours. But as the company grows, as the company looks at new avenues, new areas, new ways of expanding, it is a very important thing which our company looks at in terms of cost movement, in terms of cost positivity. So a change to activity-based costing can definitely be an exam scenario that we need to look at. The standard cost of a saddle is updated for known changes in raw material prices, labor rates, and overheads each year. So the use of a standard cost card is mentioned over here, which only changes once a year. So you can see the drawbacks. Buying of materials at the start of the year and the end of the year, price will be the same? I don't think so. Labor costs throughout the year will be the same? I don't think so. So there will definitely be variances. So record keeping in our business currently is not sophisticated. For example, webbing when issued for production is simply allocated to production, as opposed to a specific saddle or a specific product which is being made. Webbing is therefore included in variable overheads in the costing system. Why? It should be in your production, right? But in production, we don't have different headings. Everything is what? Overheads. So everything is going in overheads. You are not able to understand that overhead heading. The treatment of webbing in the costing system echoes the traditional views of the business to a large extent, which is homogeneous. A saddle is a saddle. Now, the need for sophisticated costing systems is very, very clearly visible over here, because if we don't clearly understand the different costs that the business is going through, that the business is generated, then naturally we will not be able to give good suggestions. Originally, the cost of a saddle was calculated as total cost for the year divided by the number of saddles. In recent years, efforts have been made to refine the system, but still more refinement is needed. Historically, Kanann's financial systems were focused on producing financial statements rather than providing useful management information. Just make financials. Management information like very detailed budgets, like very detailed product analysis, is not something that is focused on. And hence budgets were prepared annually on an incremental basis. So whatever the budget for last year was, add a percentage to it and that will be the budget for this year. Not very valid in today's modern world, right? So your different budgeting systems, their advantages, their disadvantages from your P1 syllabus is very, very important, because currently we are using the incremental budgeting system. Move to activity-based budgeting, you move to zero-based budgeting, can be something that the business looks at as it looks to evolve in the finance area as well, in the costing area as well. So this is part 2 of our pre-scene analysis, ending over here, which is the day-to-day running, the day-to-day production, the detailed production of production information and discussion of our business.